Hello, this is Dr. Vasant Boraste from Department of Commerce, KTHM College, Nasik. In the last video, we have discussed about the company file accounts and the balance sheet and its pro forma balance sheet as well as the summary chart, or we can say which items will be recorded in the under which head or which note. In this video, we will discuss about the summary chart or some major heads of statement of profit and loss account, where we have to consider which item should be recorded under the subhead or note. So let us start the pro forma of company final account, that is statement of profit and loss account. So let us start. So here is the company final accounts, where we have already discussed in the last video pro forma of balance sheet as well as the various subheads and its summary. After that we discuss about the statement of profit and loss, its pro forma. Now in this lecture we will discuss about the summary or pro forma of statement of profit and loss account, where we have to see the various heads and subheads of statement of profit and loss account. So here are some heads as well as some subheads of statement of profit and loss account. So let us start the summary. First of all, you must know the statement of profit and loss account, where we have already seen the income side, that is revenue from operation, other incomes. So this is total revenue. After that, there are certain expenses, the total certain expenses which are cost of material consumed, etc. As well as there is certain items which have to be recorded on the statement of profit and loss account. But revenue from operation means what, and what items will be considered or what items will be recorded under the head revenue from operation, as well as what items are to be recorded under the head other income expenses. So we have to discuss about the summary of profit and loss account. So first of all, you must know revenue from operations means an amount, or we can say income of company, where first of all the company has to record the first thing, that is revenue from operation. Second one is that uh, sale of products, that is cash or credit sale. If there is a return, it has to be deducted from the sale of product. As you know, in the last year also we have to deduct the if there is a return. Then sale of productions of scrap, as well as sale of services. Then other operating revenues less excise duty has to be deducted from the sale of production, that is which will be recorded under the revenue from operation head. Now the certain items are here, as you know. The second one is other income. In the pro forma balance sheet, the second item was other income. In that other income head, there are three heads or three subheads, that is interest income, second one is dividend income, and third one is other non-operating income. Under the head interest income, bank interest which is credited to your account, that is company's account, will be recorded under the head interest income. Then interest received on fixed deposit is there. After that, if there is interest on trade investment or government securities, will be recorded in the head, that is interest income. Second one is dividend income, where if your company has been invested in another company, and that say for example your company's name is ABC company, and you invested an amount of rupees 1 crore to in the company PQR Limited. So at that time, if PQR Limited will declare a dividend, so that dividend will be an income of your company. So it will be recorded under the head dividend income. Third one is other non-operating income. It may be a sundry or miscellaneous income, commission earned, rent received from the subletting, profit on sale of furniture, sale transfer fees received, and discount received from trade suppliers will be recorded under the head non-operating income. So this is the second major head of income of any company. Third major head of expenses, that is expenses under which first one is cost of materials consumed. So as you know, there are two sides of balance sheet. First one is debit, second one is credit. Debit side is expenses and credit side is income. But as per the Companies Act 2013, the balance sheet must be vertically managed. So where the incomes are recorded first, then expenses are recorded, and the expenses are deducted from the income, and balance will be considered as profit. So in that case, you can see here the expenses where cost of material consumed is your first item, where raw material consumed cost must be there, and that cost must be added as a raw material purchase. If there is any kind of expenses on carriage, freight or cartage, it should be added in the raw material consumed. If there is a stock of raw material, for that is closing stock, will be deducted, as well as purchase return, and that is return outward, will be deducted from the cost of material consumed. Second one is purchase of stock in trade, that is purchase of stock in trade less purchase return will be there. Third one is change in inventories of finished goods, that is work in progress, and stock in trade will be recorded over here. In that case, you have to mention the opening stock of inventory, closing stock of inventory. If there is an increase in the stock, it will be added, deducted, and if there is decrease in the stock, it will be added. So this is the third expense head. Then fourth in expense head is expense employee benefit expenses. As I earlier mentioned, there are certain expenses which we have to spend on the employee. That may be a wages and salary. That is your expenses. That is your company's expenses. So it has to be debited, or it has to be mentioned under the head employee benefit expenses. Any kind of expense which is paid for employee, it has to be mentioned over here. Second one is wages to shop floor supervisor, if is there, wages to production staff, manufacturing wages, productive wages, unproductive wages, administrative salary is there, as well as salary, wages and other benefits has to be recorded here. With this, there are some staff welfare expenses, recreation room expenses, bonus payable to employee share based payment, then employee contribution to provident and other fund. If your company is providing an amount for the provident fund of employee, so that expenses will be recorded over here. After that, if there is allowances and commission to traveling salesman, if there is any kind of expense of employee stock option plan and employee stock purchase plan, will be recorded under the head employee benefit expenses. After this, the fifth item is finance cost. So finance cost is what the cost which is incurred for the financial purpose, that is interest on debenture. Say for example, your company is borrowed some debentures, at that time the interest on that debenture has to be paid. Dividend on redeemable preference shares has to be paid. Interest on long-term loan, interest on long-term bank overdraft, interest on FD, interest on long-term loans has to be recorded under the head finance cost, as well as other borrowing cost, loan processing charges, cost of finance, other finance charges, contribution to pension fund and commitment charges has to be recorded under the head finance cost. After that, the next item is depreciation and amortization expenses, where depreciation on property, plant and equipment. As I earlier mentioned in the last video, that as per the accounting standard 10, the property, plant and equipment has, you have to calculate the cost, as well as you have to consider the depreciation of that property, plant and equipment. In the last few years, the depreciation accounting standard was different, but now it is compiled, and now a new accounting standard is established, that is S10, which comprises as cost of asset as well as depreciation on that asset. So as if there is any depreciation, you have to charge the depreciation as per accounting standard 10, and amortization of plant patents and trademarks, if there is those tools and it is written off, at that time it has to be recorded under the head depreciation and amortization expenses. After that, the seventh item is other expenses, where the list is very big, as you can take a screenshot of this list. That is other expenses, which expenses are not covered under above six subhead. So it has to be recorded under the head other expenses, that is power, fuel, motive power, electricity, workshop rent, royalty paid, repairs to machinery, consumption of spares and stores, repairs to building, manufacturing expenses, repairs of equipments, octroi and duty, general repairs, director fees, director remuneration, traveling allowances to director, trade expenses, rent rates, taxes, insurance, printing, stationery, postage and telegram, general or other sundry expenses, audit fees, accounting charges, business expenses, vehicle insurance, loss by fire, legal charges, penalty levied under income tax law, advertisement discount and rebate, carriage on sales, discount allowed to debtors, freight outward, selling expenses, rental expenses, traveling expenses, property tax, sales promotion charges, preliminary expenses written off. If distribution on cost, bad debts provision, discount on issue of debenture, written off. So all these expenses has to be recorded under the head other expenses. After that, if there is some exceptional items which are not covered under the above heads, which we have already discussed, at that time it has to be recorded exceptional items. Say for example, litigation settlement expenses is there. It has to be recorded under the head exceptional items, and if there is impairment of property, plant and equipment, and loss on disposal of investment has to be recorded under the exceptional item, as well as if there is certain incomes which we you have to mention here as general income which earn exceptionally. So these are the some these this is these are the expenses which we have to record it over here. So, and as all these expenses you have to put in the statement of profit and loss, and then you can able to calculate the total income as well as the expenses, and after calculating the expenses you will able to calculate the profit of or profit before tax or profit of your company. So in this way, I would like to say thank you very much. In the next video, we will discuss about the practical example of company final account where we will see how to prepare a balance sheet by using the various notes and pro forma, and how we have to put all the balances in the balance sheet by using the summary of balance sheet, or by using the summary of assets and liabilities. So with this, I would like to say I would like to conclude with this. Thank you very much.